Peace, EWM family, community members. What it do? This is the Price Action Junkie. And in this presentation, we'll be going over the concept of the ICT order block and the mitigation of order blocks. Okay. So the reason why it's important to really grasp the concept of the order block, because the order block plays a very, very important, it's a very, very important key factor in the delivery of price. Okay. So what exactly is an order block? Right? An order block, go again with the typos, right? An order block is the last candle or series of candles before a price aggressively trades away. And an imbalance is formed as a result. All right. So an order block is the last candle or series of candles before a price aggressively trades away and an imbalance is formed as a result. Fix my typos. All right. And what type of order blocks are there? Well, you have bullish order blocks. You have bearish order blocks. All right. So what we're looking for in these scenarios, right, of bullish and bearish order blocks, here I'll give you an example of a bearish order block. Bearish order block green, because the bearish order block, I'm actually going to make this red, because the bearish order block is the last up close or bullish candle. Up close is bullish. The last up close or bullish candle or series of candles before price aggressively trades away and creates an imbalance. Yeah. I'm gonna get better about typing, guys, I promise. All right. So the bearish order block is the last up close candle or series of bullish candles before price aggressively trades away. So here, gotta draw first. Here, in this instance, so we'll be looking for something like this. Here. Change all that. Bullish candle. All right. So we have something that looks like this. You don't want to let me move you. Right? So that's something that looks like this. And then it turns into something like this. You guys are gonna do better, I promise. It's up here so you all can see. Thank you guys for being patient. It's a little bit bigger so I can actually grab it. All right. That is a bearish order block. So now, what's a bullish order block? Bullish order block is the last down close or bearish candle or series of bearish candles before price aggressively trades away to the upside. I want to be specific. I got to be specific, all right? The bullish order block is the last down close candle or series of down close candle before price aggressively trades to the upside, right? Creating an imbalance. Right? So that's a bullish order block. So what does a bullish order block look like? Bullish order block looks like this. All right. You got a series down close candles. All right. Before we see something like this. Let's make this green, body green. Gonna move bullish order block over here. Then we continue to see something like this. All right. So now that we have a depiction of what a bearish order block looks like and what a bullish order block looks like, we'll be able to begin to know what to look for when we begin to want to see it plotted on the actual graph on a live price action chart. Okay. So a bearish order block is the last up close or bullish candle or series of bullish candles before price aggressively trades away, creating an imbalance. Aggressively trades away to the downside. This a lot of typos, guys. Excuse me. To the downside and creates an imbalance. All right. And a bullish order block is the last down close candle here, or series of down close candles before price aggressively trades away to the upside, creating an imbalance. So now you got to hear me say imbalance. So what is an imbalance? An imbalance is when price aggressively trades away. I cannot spell aggressively tonight. When price aggressively trades away with little to no retracement. An imbalance is when price aggressively trades away with little to no retracement, right? Because we see that the market likes to balance itself out, right? We tend to call it a correction. So when the market is trading like this, each of these moves are imbalances, right? Because there's no retracement. So until the market comes back to correct itself and rebalance, there will be an imbalance that is formed. So right now we have an imbalance here. because there is no retracement. Okay, and it looks the exact same way in a bearish scenario, in a bullish scenario, excuse me. Here, imbalance created, rebalance, and again rebalance, right? And that's in a bearish scenario. So these areas here where we see no retracement, these areas here where we see no retracement, here, and then this area here, where we see no retracement, is where imbalances lie. All right. This is key concepts of the ICT order block. Right, it's the last candle or series of candles before price aggressively trades away and the imbalances formed as a result. We see what a bullish order, what a bearish order block looks like. It's the last bearish up close or series of up close candle before price aggressively trades away to the downside, creating an imbalance. And a bullish order block is the last down close or last bearish candle or series of bearish candles before price aggressively trades away to the upside, creating an imbalance. All right. So now that we have this conceptualization, let's actually take a look at the actual tape. So let's take a look at the live price action chart. Here, we're actually looking back here in hindsight, in the range of about mid-June to October. Here, looking at the 4-hour time frame at the Aussie dollar, at the Australian dollar versus the US dollar. Okay. So when we're looking for order blocks, we want to see imbalance created. That is a true order block, a strong order block. Okay. When price comes back to retest an area as soon as it's created, that is not a strong order block. Like here, for instance, some people may consider this to be an order block because this is the last up close candle before price trades away. And we're looking here on the 4-hour time frame. So these smaller bearish candles may look more significant on a smaller time frame. But because price came back to mitigate these order blocks, and I'll define what mitigation really means. It means that this is not an order block because price comes back here and then aggressively trades away to the downside, creating an imbalance. We don't see any retracement here from these last buy orders, all right? So now that we know that, right, the order blocks are the last candles before price aggressively trades away, what happens? What are these candles representing? These candles are representing orders, right? Buy orders and sell orders. That's what these candlesticks are representing. So when we say that there's mitigation that needs to happen, what we're saying is essentially with an order block here, we have a bearish order block. Oh, I'm gonna have to get rid of my drawings, guys. Hope you got it. All right. So here we have a bearish order block. So here we have a bearish order block. Change this to red. All right. We have a bearish order block. Okay. And we notice there's a bearish order block because here we have a series of up close candles, a series of bearish candles here, right? We have a series of bearish candles here before price aggressively trades away to the downside, right? Creating an imbalance. Remember, the imbalance is little to no retracement, right? They did retrace back up into this order block here, reaccumulate some sell positions, and they continue to reprice downwards. So what happened up here is that the institutions, right? The banks, they sold up, they sold up here, right? But before they sold, they bought. So in the liquidity video, I brought up the fact that the central banks and interbank traders, they do not trade the same as retail concepts and as most of us retail traders trade, right? You know, the institutions buy to sell and they sell to buy. They buy to sell and they sell to buy. So what does this mean when we say that they buy to sell and they sell to buy? Well, we're saying that buy orders are placed to create liquidity in the market. The buy orders are placed to create liquidity in the market before institutions price in the opposite direction. Now, I know some people will look at this and will say, what? That doesn't even make sense. But guess what? It's not supposed to make sense. It's not supposed to make sense. Remember that these central banks and the interbank traders are diametrically opposed to retail traders and retail trading concept. They do not trade like us retail traders. They don't. They buy to sell and they sell to buy. So they have sell orders are placed to create liquidity in the market before the institutions reprice in the opposite direction. You're gonna fall in love with my typos, I promise. All right, before they reprice in the opposite direction. So what happened here in this bearish order block? Well, here in this bearish order block, the institutions actually bought here, right? So they bought here before they sold. Right? The institutions bought here before they sold. This is what happened. I'm gonna have to do this better and better color so you can see it. They bought and then they sold. So here in this scenario, what might happen is that the institutions here in this buy order, they may have placed orders, you know, and maybe they may have entered, I don't know, maybe something like $10 billion in buy orders, right? $10 billion in buy orders. So now they have $10 billion here. They entered here $10 billion, right? They entered here at $10 billion. And now they are negative. Okay. Now they are negative. So now they may be negative $10 billion, right? They may be negative $20 billion. They may be negative $50 billion, right? Negative 10, maybe negative 20, maybe negative 50 billion, right? Billion. So what are they going to have to do in order to mitigate their losses? Well, they're going to have to eventually reprice the market higher back up so that they can close these buy positions here at break even. So they're going to look to reprice the market back higher so that they can close these buy positions at break even. So again, what is mitigation? When the institutions reprice market back to an order block to close losing positions. To close losing positions. And some people would think, well, if the banks control price, if they control the markets and they move the markets how they want to, why would they ever place themselves in losing positions? And that's the thing, you just said it, because they control the markets. And like I told you before, that this is their game. So they're going to play the game how they want to. So what they're going to do is do the exact opposite of what retail traders would do. They're going to think the exact opposite of how retail traders would think, because retail traders are trading emotionally. They're trading with greed, and they're trading with a popular knowledge, right? When the information that moves this market, the people that moves this market have a insider's perspective, right? Have an esoteric perspective of how the markets move. Again, remember that smart money, they are people behind the scenes that have excess knowledge, information, tactics, and technology that gives them the advantage. And yes, technology, because the interbanks and central banks deploy high-tech algorithms in order to reprice the market in a way that it reprices. So here in this bearish order block, we saw that they bought before they sold. So here now they're negative $10 billion, they're negative 20 billion, they're negative $50 billion. So they're going to be looking to come and mitigate this order block. And when we say mitigate, we mean completely and fully mitigate this order block. It's out the way here, right? And we're going to put it on the body for right now, right? You will see them even on a higher time frame come up to mitigate it all the way on the wicks, because the wicks, while they are less price action on a higher time frame, they're still price action on the smaller time frame. They're still full candle bodies, maybe on the 5 minute or the 1 minute time frame. So we'll be looking for price in the future to come back and for the banks to mitigate their losing positions here on the trade. Remember, an imbalance was created, so they're going to need to rebalance the market. All right. So this is how you know this is a strong order block, because price never came back to fully mitigate this. Price did indeed aggressively trade away before being mitigated, right? And we have another bearish order block here as well. Right, delete that. We have another bearish order block here as well. I would definitely consider this a bearish order block, because this is the last bullish candle before price aggressively trades away to the downside, creating another imbalance. All right. So we see here again that the banks bought again, and now they've taken themselves to the negative here. So we will look for this area here to be rebalanced, right? We look for this area here to be rebalanced, right? Or to be mitigated. And what do? We come over here and can see that indeed it was mitigated here. All right. The banks are always going to come back to close those losing positions, because they're in it to make money as well. So they're going to want to mitigate their losses, right? They're going to want to mitigate their losses. They have losing positions here. They have losing positions here. They're going to come back to mitigate those losing positions, or to close those losing positions at break even. So we see price aggressively trades away, consolidates here, consolidates here, consolidates here. We have a decent range of consolidation here for almost about the 20th of July, till about the 16th of August. So almost a month of consolidation. Almost a month of consolidation, right? So we're not going to really get too much into liquidity, but you will see that this is, or this will be considered a strong level of resistance by retail traders and retail concepts. So they'll be looking for a breakout. So what will we have here, right? Above here, we have buy stops. All right, we have buy stops and liquidity above here. We have buy side liquidity above here. And then below here, because it's a range, they will see this as support. We have sell side liquidity here, or sell stops. All right, just tying everything together, guys. Just tying everything together. We have sell stops and sell side liquidity here. All right, so we will look. So you have retail traders who will be expecting a breakout here, right? They will be expecting a breakout, right? So if price came down, traded below this low here, they will have sell stops here, and those sell stops will be activated, right? And what move did we get to actually activate these sell stops here? Well, we have the old bearish order block here. And the old bearish order block here. The order block is here, and it's not here. Why is the order block not here? Because I told you, if price immediately comes back to mitigate this, it's not a strong order block. It's not a true order block. All right. We want true strong order blocks on higher time frames like we are here on the 4-hour, and price to aggressively trade away, creating an imbalance. So here we have an imbalance here, right? Again, they're negative. They have entered buy positions, and now the banks are negative 10 billion. They're negative 20 billion. They're negative $50 billion here, right? The same here. So this bearish order block, this bearish order block, and the banks are going to be looking to close out these losing positions. They're going to be looking to close out these losing positions. What are they going to do? They're going to induce liquidity into the market, engineer liquidity into the market. They're going to come down here, right? And then we're going to see a reversal happens. And in this reversal happens here, what do we see here? We see a series of down close or bearish candles before price. Excuse me, guys. We're going to see a series of down close candles here before price aggressively trades away to the upside, right? Price aggressively trades away to the upside. And that is our bullish order block. So we have a bullish order block here, right? So now we have a bullish order block. So now we've seen instances of bearish order blocks, and we've seen an instance of a bullish order block as well. Right? And we know this is a strong true order block. No, this is a strong true order block because on a higher time frame, it is around a key level as well too, which we'll have videos on that in the future. And price aggressively traded away, creating an imbalance here because we have little to no retracement. Small doji candles here on the 4 hours, going to be smaller time frame, little retracement, slight retracement here, but price never comes back into this area to mitigate the order block, right? Never comes back to mitigate the order block, right? And so the bottom of this bullish order block is going to be here. And I'm putting on the wick so you can measure the range, right? But we do want to focus even more on the bodies per se, because that is a lot more trading volume, okay? So we see here we have a bullish order block, and then price begins to run buy side liquidity, right? Because now we have liquidity here. Liquidity is here. We know that liquidity is here as well too. Okay. So now the banks are going to be looking to close these positions. So what do they have to do? come back to mitigate these order blocks. So this bearish order block gets mitigated with this move to the upside, right? And then we see that this order block gets mitigated by this high right here. And then we also see that the liquidity in these buy stops were ran and tapped into and swept, activating those buy stops. So now these willing participants are in active buys at the time. They're in active long positions. So they're anticipating price to continue to the buy side, continue on the upside. And then what does price do? It turns back around to take out those buy stops, take out their sell stops, and then run this sell side liquidity that lies beneath these lows because they bought down here and they're looking to sell at a premium. Then they're going to come back down so they can get back in at a much greater discount at price. And at the same time that all this is happening, they're absorbing liquidity, running liquidity, and they're mitigating losing positions. So this is the losing position that they were in, right? This losing position allowed them to get sellers into the market so that now we have liquidity engineered here, and we have liquidity engineered here as well, because now we have a low, and what lies below lows? Sell stops and sell side liquidity, right? Money. It's money here, right? And again, at this bullish order block, we know that institutions are down negative 10 billion, negative 20 billion, $50 billion, right? So now they're in losing trades here because they sold here and then the market repriced higher. So they will be looking to mitigate this bullish order block as well. So now let's see what price does. Come over here. Price continues to come down here. Price did not come back down to mitigate this order block. It came actually right here into it. Actually, it came right into this whole series of candles here. Excuse me. This order block. I would deem this the order block. This is 4-hour time frames. It's going to be a daily order block. It's going to be a daily bullish order block. So the market did come tap right into the daily order block. It did not come to mitigate it. It came in here, went long again. So smart money again bought here. And you know that other traders again bought here as well. And now they're running buy side liquidity. We have equal highs here. Ran, right? We have a smaller order block here because an imbalance was created. And this was mitigated here. They continue to run here. We had a small imbalance created here, mitigated. And we had another bearish order block here. All right. It don't have to be the biggest candles in the world, right? So we have another order block here, another bearish order block specifically. All right, we have a bearish order block here. And what happened? Price came to mitigate this here, and this move here. And now remember that back here, we have traders who are sold here, right? We have traders who are sold here, and we have traders who are looking at this area as a level of resistance. We tap into these buy stops here once, took them out. So now we have buy side liquidity that rests up here. So now we have buy side liquidity that rests up here above these highs, because that's where buy side liquidity rests above highs. We have equal highs here as well that the market will run on. And they did just that. They tap right into this pool of liquidity up here, mitigating this bearish order block up here. Okay. So now we see that this order block is gone. You see this order block is gone. right? And this order block has been mitigated, right? It's not necessarily gone because it's still there, obviously, right? It happened in the market. But now we've seen that they're not negative in these positions anymore because they've broken even and they've rebalanced the market. They've rebalanced the market up until this point here. There is still imbalance here at this bearish order block, and there's still imbalance here at this bullish order block. So we will be looking for these areas to be targeted. And this entire time, liquidity is being ran and they're absorbing liquidity, taking out traders. And let's see what price continues to do. And price trades in the range, and boom, you see it here. Price came back to mitigate this order block and to close these negative positions. So now this order block has been mitigated, right? Institutions are not negative here anymore. They tapped into this order block. They tapped also into a pool of liquidity here. And then we see them turn back around and begin to trade higher. And we can look and see here, we have highs that were targeted, short-term lows that was targeted here. And we'll be looking for this area to be a target because what's here, we have equal highs here. And we know that buy side liquidity rests above these highs. And we know that the banks will be looking to target these highs. And why would they be looking to target these highs? Because they bought here at a discounted price, right? They bought here at a discounted price and will be looking to get out of their long positions. They will be looking to sell out of their long positions. And how they sell out of their long positions? They need to sell to willing buyers. And who are the willing buyers? The buy stops who are waiting to be activated to get into buys. All right. So that is for that on the 4-hour time frame. I want to show you guys this happening as well on a smaller time frame. So we're gonna go to the 5-minute time frame. Right. We're gonna go to the 5-minute time frame. Scroll out. Trade the exact same thing that's happening. All right. The exact same thing that's happening. So even on a 5-minute time frame, even on a 5-minute time frame, we can see the exact same things happening here, right? So here we have our bearish order block. Here we have our bearish order block here. And what happened? Price trades away. All right. Price trades away. Make this red. But what happened before they traded away, right? They bought to sell. They bought to sell. They bought to sell. So now there's imbalance here because look, there's no real retracement here. So now this order block here, they are negative 10 billion, 20 billion, 50 billion, infinity billion dollars, right? Now there's an imbalance created here. So what happens? You see price come here. And it's essentially moving sideways. But what you'll come to find out in later videos, this is not actually, well, this is consolidation, but what they're doing is accumulating long positions. They're accumulating long positions, right? Came back up here to this area. They sold one last time here. They sold one last time here before they bought here and aggressively took price up here, doing what? Mitigating this order block. This order block is fully mitigated now. And at the same time this happens, we have a bearish order block that's formed. Excuse me, I have a bullish order block that's formed here. So guys, you see the same things that's happening on the smaller time frame is happening on the larger time frames. Again, I told you these concepts that you will be learning here in this series will be applicable across all asset classes, currencies, commodities, indices, metals, and even more now so cryptos as well, stocks, futures, bonds, right? But also across all time frames, higher time frames, the monthly, weekly, daily, 4-hour, hourly, 30 minutes, 15 minute, 5 minute, and 1 minute time frames. It's the same thing, right? So you see that they bought here and they to sell. So they were negative here in these buy positions, negative billions and millions, negative millions and billions of dollars here in these buy positions. And they sold, and now they've come here. They've done a lot of inducing, right? A lot of knocking out support resistance traders here. I mean, I thought it was resistance here, knocked out. They thought support was here, traded below that. They traded higher, resistance, turned support, came back, traded below that, broke through that support here, and just came here, playing ping pong, right? And even here as well, right? We do see another bearish order block. You do see another bearish order block. What happens? Price mitigates this with the quickness. Well, not essentially with the quickness, right? This order block was made on the 4th of January. And oh, well, yes, it's today. I guess it's today. Yeah, I'm on a 4-hour time frame. Or not today, but the other day, excuse me. But yeah, so this took roughly about 5 hours to complete. 5 hours to mitigate this, right? It took about 5 hours to mitigate this. But this is a pretty decent move, right? So you was able to, right? It's a pretty decent move, right? So now we're talking about 30 pips, right? 30 pips in 5 hours. It's not bad, especially if you're a beginner. That is not bad at all. So now here we see this bullish order block here, and we would expect price to come back down to mitigate that order block, right? And we know that it does indeed blows through this order block, blows through all these sell side liquidity here. And so now these sell sides have been activated. We have active sellers in the market, right? And for those that trailed their stop losses, they've been taken out. Those support resistance traders, right? I thought this was resistance here, have been taken out. And now we see that price is traded back down, came back to take out other sellers here, short-term sellers that have trailed stop losses. Again, equal highs here, because you have support resistance traders here, even on the smaller time frames, guys. Support, they'll think this is resistance. Then the market here trades above that and collects these buy side liquidity that's above there, guys. So I just want to show you guys as well that these things are applicable across all time frames. Again, so that is the concept of the ICC order block. All right, that is the concept of the ICC order block. I hope you guys are able to gain some value from this video, and we will look forward to the next presentation. Guys, if you need any additional help with your curriculum, any additional help with further entering and understanding these concepts, guys, go into the Discord, drop some questions, and we would definitely love to plug in with you all, guys. And until the next time, I'll see y'all. Peace.